Good morning, everyone. Market conditions shifting back to mildly bearish in a bull market, and that bull market setting at 22.2 had a pretty nasty sell-off yesterday. We'll take a look at some of those price patterns here. We've got the overall momentum, which is shifting back into that range-bound scenario, pulling back into out of that buy zone. We'll take a look there as well. Breadth moving back into that trending zone, and also sentiment still elevated, but pulling back off of some of those extreme levels that we've seen over the last few weeks. Buy-sell ratio didn't actually have much of a move yesterday, which was interesting, still sitting at 0.96 and 0.94 the day before, so just slightly below 1, essentially 1 on buy-sell ratio right there. So we'll see if we get any support after that sell-off that we saw, and sentiment accelerating towards that 50% range, 56.44 right here as well. We'll watch that 50% range, 50% being right here, that halfway point, or even right where we're at right here. Watch to see if we can get some support right here on S&P 500, the markets as a whole. Let's take a look at S&P 500 here and you can see how aggressive that bar was yesterday. We've talked about these ranges now, so we've now closed back below this support area, this 515 range. So now we've got to be watching for a couple of other areas around that 506, probably just below that as well. Really that entire range right there between 500 and 506. Want to see that hold up on S&P 500. This is indication of some indecision. So these are early stages. If things are going to reverse, this is how it starts. It doesn't necessarily mean that it can continue the acceleration. We've had these before in this uptrend. We've had a couple, bars that look like not quite as aggressive as we've seen yesterday, but they can happen, and we're working with support areas now. But we're also at the upper end of that range, that bull market rank of 22 is concerning at these levels. It just is not. That's as I've mentioned before, as high as I've seen it, maybe two or three times just over the last 10 years. It doesn't get this overbought. So we have a day or two like this that actually is not, that's actually healthy in the long term, but now we want to watch to see where these support areas hold up. We also want to keep an eye on bonds and talk a little bit about interest rates there as well. Saw a little bit of a pop. So now we want to see if we're starting to get a little bit of a support here in the bond market around this 50% retracement of this current trend. This is TLT, which is the long-term bonds. If we look at SHY, which is the shorter term bonds, also a little bit of a pause right there as well. So big market down day, bonds holding. We'll see if that helps with interest rates and market perspective going forward as well. If we take a look at sectors, we are definitely seeing some changes here in this setup, as I like to point out, kind of the number of buys, the number of holds, and the number of sells each day. And these are just major sectors in the economy. So you can see they're kind of broken out here. I just sort them by this setting right here, and getting some additional weakness here in this as well, as you're seeing more and more of these shifting to downtrends. This again, it's a slower process. Yesterday was a decent day where we had that big sharp move lower, but this overall uptrend, the market has not necessarily wanted to sell off or really rally at these levels. We certainly are seeing commodities moving well. Oil still moving higher, 0.26% yesterday in that overall uptrend, and has actually shifted trends now. If you notice that this Fibonacci line is now connected to this trend, it was still connecting to this trend for a little while. So now pardon me, struggling this morning, this overall uptrend. Now we've got this frame of reference for this current bullish, or this current oil bull trend, and we can keep a closer eye on that as well. But definitely some strength in that. Getting to that upper extreme range may have a bit of a pullback here also in oil. Silver is moving strongly. We've also seen gold moving strongly as well, and seeing some other commodities moving as well. Wood, steel has been moving, and those have really the oil and the gold are ones of the biggest talking points that are out there, or additional things that matter in terms of oil being a headwind potentially for the economy, and then also gold being a flight to safety asset class that money could be moved into. Let's take a quick look here at some muscle stocks for the day. We've got continuing to look at pharmaceutical drug stocks. AMRX didn't have a real solid confirmation day. It moved back up into the buy zone, but you can see it was kind of a reversal day where it gapped higher, moved up a little bit, and then ultimately closed lower than where it opened. So you get that black body, which is looking like that still. But keep an eye on some of these. Some of these retracements just may be a little bit of markets just resetting, but it also could be early signs of significant sell-off. As we talked about, well, let's look at a couple of other stocks here quickly. DAVE, which is in that finance area, it's fintech support area right here at 35 on DAVE. MOD also been a real strong mover in the auto space. Heating, or I think it's mostly AC air conditioning units in the trucking industry. Watching for some support here on MOD as well. Keep an eye on that. Still some good looking stocks, but again, market conditions are starting to crack just a little in this current trend. Keep an eye on that. Be aware of that retracement level, making sure that your cash levels are where you want them to be, your stop levels are where you want them to be, and your just overall exposure is in a position that could allow for some volatility in the market right here. That'll do it for today's update. Everyone have a fantastic day today.